Welcome, everyone, to this episode of Perpetual Perspectives powered by Vest Exchange. Vest is a novel perpetual futures exchange built on ZK Sync. Currently, we're in phase one since the 29th of April, which is a private alpha mainnet through way of invite codes. The next phase will be a public mainnet, which is open to everyone. Keep an eye on the Twitter account at Vest Exchange and jump into Discord to be a part of the community if you're interested. I'm your host, Stoic, and today I have the pleasure of having with me Cred, aka CredibleCrypto on Twitter, as you may know him. And if I understand correctly, and I'll let him also introduce himself and clear things up, but he predominantly uses wave theory, price action, as well as order flow. And as far as I've seen, Cred, you're one of the most active on Twitter in terms of your thoughts on the market in real time for the size of your account. And you're a phenomenal educator as well. I've seen you extremely patient, answering every comment, all the questions in your comments in an extremely patient manner. So I've been looking forward to this conversation for a long time. Thank you for sitting down and having this discussion with me, Cred. Without much delay, let's get right into it. Can you please introduce yourself, and if there's any gaps that you'd like to fill in terms of how I characterize how you trade and what you predominantly use, please go ahead and do so.
Yeah, thanks for having me, Stoic. I think you pretty much nailed it on the head in terms of like my strategy that I use. There's quite a few different components and a difference between what I'm looking at, when I'm looking at the macro or if I'm looking at higher time frames. Primarily, a lot of behind the scenes stuff going on with Elliott Wave, like you mentioned. Not necessarily stuff that I'll share all the time because there's a lot of misunderstandings around it, but that definitely is a core of my analysis. And then on lower time frames, order flow, supply and demand, the typical stuff that you tend to see on CT is all kind of part of the equation.
Yeah, thank you for clarifying that. And we'll try to get into some of that stuff as well. How did you get introduced to crypto and trading? And what was your background before trading, if you would like to share that?
Yeah, so I got introduced to crypto in 2017. It was a funny story how it happened. Actually, I have a close friend, and his little brother had texted me one day asking about investing, as he often does. And he asked me about Bitcoin, and this is back when Bitcoin was trading at, I want to say, around $1,000. I think it was the first time it had hit 1,000, so there was a lot of chatter about it. And I'd been hearing about Bitcoin since I was in college, back when it was a couple $100, and I kind of ignored it for the most part. Never really thought twice about it. And it wasn't until my friend's little brother brought it up that actually, in fact, at the time when it was $1,000, he brought it up, and I told him, I think it's a scam. I think it's BS. I wouldn't invest in it. It's already gone up so much. How can it go up higher? And at the time, I didn't know much about it at all. So I was just talking, based off of the murmurings that I'd heard about it. And so I basically told him, don't bother with it at $1,000. And then fast forward like 3 to 4 months, and we had a family barbecue, and a cousin came up to me and she's told me that her boyfriend was into crypto. And I said, oh, really? And she's like, yeah. I was like, well, what price is Bitcoin at now? And she's like, well, it's at $3,000. And I think in that moment, I kind of realized something kind of clicked. And I was like, I've been hearing about this thing for literally years now. I've been ignoring it. I just told my friend's little brother to ignore it at $1,000, and here it is at 3,000. Maybe I should, give this thing a chance and look into it. And that's kind of where all the research about crypto started, where I finally, took the plunge and jumped into learning about it. And within a week, I had bought my first Bitcoin, somewhere between $3,000 to $4,000. And so that was kind of where I first jumped into crypto when I first started learning about it. Bitcoin would then go on to continue to climb up to $20,000 in the next 6 months or so, I believe. And I ended up selling my Bitcoin at about $11,000 right before that, like 2 week spike to 20K. And I did that because I was learning technical analysis at the time, and I was looking at RSI, and RSI was overbought. And so a common
Yep.
misconception about that
Yep.
is that when RSI is overbought, it means it's time to sell. When RSI is oversold, it means time to buy. And so me being, the novice trader that I was, I sold my Bitcoin at 11K and then watched price double in like 2 weeks. And after that, I was like, well, obviously I misinterpreted the RSI here. I clearly I did something wrong because I missed 100% gain in 2 weeks. So how do I make sure that that doesn't happen again? And that's kind of what got me down the rabbit hole of technical analysis and trying to understand, the mistake that I made and how to make sure I don't replicate it. And that was, again, back in 2017 after Bitcoin had hit 20K. So that's really when my journey started, 7 years ago. And the rest is pretty much history.
Yeah, I'm smiling, and that's awesome. Thank you for sharing that because most people that I talk to, they have a similar story, right? I mean, they got in really early and they sold way too early because as a novice, you don't know much.
Yeah.
So you don't know any better. And so, we're talking about the learning aspect of things. What did trading look like for you initially? Like where did you get your information from? And I'm basically 100% self-taught. So I like to ask this question because everyone has kind of their journey into who they stumbled upon and what information they started consuming initially to get to information that they found was valuable for them. So what would that process look like for you in terms of learning?
Yeah, so actually initially when I first jumped into it, I was actually on stock twits a lot, which is kind of like almost like a Twitter for stocks, I guess you can call it. A lot more low key than Twitter today, but was kind of like the stock version of CT, I would say. And so I was on stock twits, and at that time, this is just prior to crypto. I was investing in stocks, tech stocks, and I was a novice there as well. So I was not really trading actively. I was primarily just investing, but I go on stock twits to kind of find updates about stocks and get kind of like what we do on CT, kind of get other people's opinions and ideas about the investments. And on stock twits, I came across some people talking about Bitcoin. And I remembered that once I got involved and I went back to stock twits and I used to follow them, and I actually joined a paid course, a paid group. This was back in 2017 to try and kind of accelerate my learning about technical analysis. This is after I made the mistake of selling Bitcoin too early. So I joined a paid group and I paid a monthly fee to learn more about the basics of TA. I don't remember the name of the group. It wasn't a group that's currently on CT. This was back in 2017, so it was some random group on StockTwits. But what I learned from that group, I think I was in there for a few months, and I kind of learned the basics about support resistance, RSI, those types of things in that group. The leader of the group had a specific strategy he would use, which is not, it's unlike anything I've seen even to this day, and it didn't quite work for me. So I ended up not going through with that. But I can say that that sort of accelerated learning experience, paying a few bucks to get an insight into people that are obviously more experienced in this space helped me tremendously kind of boost my learning at an early time. I think most people are hesitant to join paid groups because they think that I mean, I don't know, it's a weird thought process to think that paid groups are scams. The idea is that you're paying to kind of fast track your learning. I think a lot of the content that can be found in these groups can be found for free online, but the ability to join a group where you have a lot of like-minded individuals there to answer your questions on a day-to-day basis and help you kind of navigate things at an early stage, I think is invaluable. For me, the cost of a couple of months of what we can call tuition to kind of fast track my learning and growth about technical analysis at an early stage, I think there's nothing wrong with that. I think it just makes sense. For me, my time is very valuable. And so if I could pay a few bucks to accelerate my learning and save some time, that's worth more to me than the cost of a group. So I think that there's certainly merit to a lot of groups out there. Of course, not all of them are going to be useful, but I don't think there's any harm in utilizing those services to kind of accelerate your learning. You can't always do it for free. It's just going to take longer. And for me, my time is valuable. So I looked at that as a option. So I started off there. I ended up leaving the group after a few months. And that's when I kind of got interested in Elliott Wave and started learning about Elliott Wave. Now, the group owner did not believe in Elliott Wave and looked at it kind of negatively, is why I ended up leaving the group. He wasn't very, very, what can you say, like
Perceptive
supportive of my
towards
usage
it.
of
Yeah.
some other method, right?
Yeah.
So,
I mean,
yeah, go ahead.
yeah, sorry, go ahead.
Yeah, so like he didn't like that I was using this other method that didn't run like along with his idea. So I left the group. I started studying Elliott Wave, and that's when I went down the Elliott Wave rabbit hole back in 2017. So I mean, like I said, the group was definitely valuable in learning the basics of TA, but I just found it wasn't for me, and that's fine, and went my own route with Elliott Wave, and that's how I got started with that method of analysis.
Yeah, thank you for sharing that. And yeah, Elliott Wave does get a lot of there's misconceptions and there's a lot of I mean, I personally don't use Elliott Waves, but everyone has. I mean, it's very unique. The way I see trading, it's very unique in terms of your mindset and how you approach certain things. So I want to get into this a little bit more. How did your trading evolve since your first trade, and that process of like in terms of technically speaking, did you try a bunch of different things and then settle on where you eventually ended up? Or like how did that process look like for you? Like I mean, you kind of touched on this, you started looking into Elliott wave theory. Like how did that evolve for you from there?
Yeah, so I like to say, well, I mean, this is kind of cliche, but when people say knowledge is power, like it really is. I think like I'm an econ major, so I have a basic background in economics, but so supply and demand kind of comes naturally to me. All these things that kind of affect markets are kind of come naturally, but I think that sorry, what was the question again?
Yeah, no problem. So, basically, I guess the question was that how did you, technically speaking, and even in terms of mindset, how did your learning? So you said, you started studying Elliott wave theory. Did you try a bunch of different things? Because some people will jump from, one thing to another thing. And I want to clarify this because a lot of people ask me this question. Hey, how do I get to, what my trading style is going to be? What do I use? There's people that are only using RSI and awesome oscillator. There's people using Elliott wave theory. There's people only reading price action. So
Yes,
that's
yes, yes.
I think
Okay.
that's kind of what I'm trying to touch on here.
Got it, right. So where I was going with that was that I'm always like on a thirst for knowledge, right? Like, so the way that I approached it was I started off, obviously in the group, I learned a little bit about basic, TA, support resistance, RSI, and then I started diving down the Elliott wave rabbit hole, and I learned a lot more about that. And through the last 7 years, it's been a constant learning journey. Like I've never stopped learning. If there's anything that I feel like can improve my game, I'm gonna give it a shot. I'm gonna try and understand it, see if it can help me out here. So the process over the last 7 years has been a constant learning journey. And like I said, I went to college, and people debate about the usefulness of a college degree and all that stuff, and that's fine. I don't necessarily think that the college degree is so useful. Maybe if you're going to work for corporate, sure, but for people like us who may not be doing that, I think what's more useful is getting that knowledge and opening your mind, and that's something that college helps with a lot. So like I'm constantly looking for ways to improve my game, and even today I still do that. So it started off with traditional TA, learned Elliott Wave. That improved my game a lot. Continued on down the road. I've tried with EMAs. I've tried learning about Ichimoku. I've tried learning about pretty much any method that exists in the market. I've looked at it. Like I've taken a deep look at it. I've tested some things out. I've seen what works, what doesn't work. I don't dismiss anything. I think that there's a million ways to skin the cat here, and it's worth opening your mind and testing things out to find that particular method that works best for you. And so if there's a method that's out there, I've probably looked at it, I've probably tested it, and at some point I decide either this is working for me and it's improving my game, or it's not. And whatever improves my game, I take what I can from that method and I add it to my repertoire. And whatever is not helping, I just discard it. And I think that's kind of the approach that everyone should be taking. If there's a way that you can potentially improve on your game, why not look into it? That's kind of the way I see it.
Yeah, 100%. You dropped a lot of gems there, and we could have this entire debate about the formal education stuff, but I think you touched on it perfectly. It does promote first being able to teach yourself things and then logically deconstructing different things in an impartial manner rather than having a bias and just not be willing to learn. And so yeah, I went through that same process where I looked at basically everything under the sun, and at the end it comes down to, hey, what's the least amount of information I need to be able to pull that trigger and make those decisions that I need to make, and to be able to cut the fat and get to where I want to get to. And along the same lines, what I wanted to ask you was, how would you describe your trading edge currently in a few sentences, or like how would you break that down for yourself?
Yeah. So let's see. I guess it's gonna be hard to do it in a few sentences, but I would say identifying the macro trend, number one.
Mhm.
Once you have identified the macro trend, and this refers to specifically Bitcoin because it leads the market. So
Right.
I don't care how great an alt looks. If Bitcoin is in a raging downtrend, the alt's going to struggle regardless. So first step is identifying where Bitcoin is in this whole stage. Is Bitcoin in an uptrend? Is it in a ranging environment? Is it in a macro uptrend? Is it in a lower time uptrend or downtrend? And then once you have Bitcoin kind of isolated and understood, then you can look at how alts may act with relation to Bitcoin. So identifying the macro first using Elliott wave primarily. So the basis of all my analysis on the high time frame is Elliott wave. And I may not make that clear all the time, or I may not say that all the time, but even if I don't mention it, it's there in the background, and it's probably the number one most important factor on the macro for me. After I've isolated the macro, using Elliott wave, I'll go down to lower time frames. Depending on if I'm looking for like a swing trade or a scalp trade, I'm looking at traditional support and resistance. Not so much horizontal trend lines. I don't rely on those or use those very much. I don't really use moving averages either very much, but traditional horizontal support and resistance, along with like traditional supply and demand on the
Mhm.
lower time frames. And then also Elliott wave comes in again at those lower time frames to help identify lower time frame impulsive, or you can say trending price action, versus lower time frame corrective, or you can say ranging price action. And then based on if we're in a ranging or trending environment, I'll either look to trade swings or I'll look to just trade the range.
Awesome. Yeah, thanks for sharing that. And then what I wanted to touch on as well is what do you think you've struggled with the most when trading, or anything that you still struggle with, and how did you go about remediating that?
Right. So I think the biggest struggle, and I still struggle with this to this day, is just kind of waiting for the right trading opportunities to present themselves. It's like a never-ending challenge because realistically, depending on what you're looking for, you can scalp like the 5-minute time frame if you really wanted to. You can trade the hourly, you can swing trade the weekly or the daily or the monthly, and all of those are viable options. And when it comes to trading, and you kind of feel like there's this constant feeling of, there's opportunities to make money on every time frame. So a lot of times back when I used to primarily trade higher time frames, the temptation would always be there to zoom into the 1 minute or the 5 minute and try and scalp, because why
Mhm.
not? If I can make more money, right? The opportunity is there, it's doable. And so kind of finding a balance between taking the most optimal trades versus maybe subpar trades, or finding, the patience to sit on your hands when a specific, when you're trying to trade a specific time frame. I think that's the biggest challenge, and that's something that I face today, especially when the markets are boring like this. You're kind of just sitting there like, let me find something to trade, because why not, right? At least that's the mentality that most people
Right.
have.
Right.
And so I think that's the biggest struggle, is being patient and determining
Mhm.
what time frame you're looking to trade and then sticking to that.
Yeah.
And I think the second biggest struggle is risk management, because that temptation is always there where, hey, I can risk 5,000 on this trade and I can make X, or I can risk 10K and make twice that much, or I can risk 20K and make 4 times that much. And so risk management and deciding how much you want to allocate to each trade is probably the second biggest challenge after patience. Both of those, I think, kind of go hand in hand, and both understanding them and really managing them is, I think, vital to being a successful trader.
Yeah, that's such a great point, because I think the issue in this space is because the barrier to entry is non-existent. A lot of people struggle with that, leverage. They struggle with sizing, and also being able to manage their risk. And so I've gotten, so many DMs and questions about, hey, like I ran up my account from $1,000 to, some crazy number, and then they run it back down because they just haven't established any process really.
Yep.
And so when everything's trending, it's easy, right? I mean, you could it's fairly easy if you could, you could get lucky and not get liquidated. And if the market's trending in one direction, you're going to keep making money. But the same way that you make that money, you basically give it up. And so, yeah, thanks for sharing that. And the other thing I want to touch on is, what would you say are your strengths, like in terms of trading? Is it your mindset? Is it the way you approach it? Is it the way you view the markets? What would you say your strength
I
is?
think, yeah, I think one of my strengths is it's almost in the idea that like the method that I use at its core is this concept of Elliott wave, which which because it's made fun of so much by so many traders and not taken seriously, I feel like it's a piece of the puzzle that's missing from the average trader's, repertoire or their analysis. And because that's kind of the basis of my trading, it gives me almost gives me like a view that other people don't see, if I could say that. And so having this unique perspective on the markets when it comes to cycles, like macro cycles, obviously like my macro, thesis right now is very contrary to what a lot of people think, and that's served me well over the last few years. And I think having that different perspective that for some is so difficult to see gives me a bit of an advantage over the average trader. I think that's kind of where my strength lies, in being able to consider alternate views that many others aren't even, open to even listening to begin with.
Yeah, no, that's so important. And I try to do the same thing, is try to be as open as I can, and engage in the conversations where, if, I have a certain view and someone has the opposite view, I want to hear that view, and I think
Exactly.
Ray Dalio mentions this, he calls this something called triangulation, where you want to have opposing views. So you're not in this chamber, in this echo chamber of, being fed the same bias and reinforcing that.
Yep. Yep.
And so I want to dig into, you mentioned like your thesis on the macro, and I want to get into this eventually as well, because you have like this whole pretty detailed view of, that you've established. And I believe you posted it on Twitter as well. Is that correct? I remember
Yeah, I
reading it.
posted it on Twitter. I mean,
Yeah.
it's over a number of tweets now, but there's like one main tweet that kind of covers the entire thesis. It's on like my highlights tab on my Twitter profile. But yeah, it's something that I've been talking about for like years now. So you've probably seen mention of it in one form or another. I discussed it in YouTube videos. I've posted on Twitter about it. But yeah, it's there.
Yeah, so we'll get into that, and I mean, if it's not too extensive, maybe you could kind of summarize it or break it down, and we'll talk about that as well. But the one question I wanted to ask you, there's this running conversation around either being a specialist in a few different assets, or and understanding the nuances of these few assets versus trading numerous tickers at the same time. Based off of just, some people just see, hey, this setup is here, I'm going to take this trade. It doesn't matter what the ticker is. What is your thought process on that? And what do you think about that?
Kind of a little bit of both, I think, is the right approach because I think for me, like, I'm not the most organized. So for me, I try following like 7 to 10 tickers at one time. And that's kind of the max that I can keep up with, like mentally, right? I know there's some people that are out there constantly surfing through like 300 tickers a day. That's a little bit much for me. So for me, it's like, it's nice to have certain charts that I'm drawn to because maybe I have longer term spot investments in them, or maybe they're coins that I care more about, based on fundamentals or something like that, that allow me to kind of focus more on those coins. But it's like occasionally I'll find a ticker or someone will mention something, or I'll look at a random chart and I'll see a beautiful setup and I'll take it. Right. So it's like, there's no harm in taking setups on any coin whenever you see them. I think it's just a matter of kind of not overburdening yourself, or kind of getting in over your head by looking at like 40 tickers at once and then missing the most obvious stuff because you're spread too thin and you're trying to pay attention to too much at one time. There's lots of trading opportunities everywhere. You're not going to catch all of them. You're going to catch a fraction, maybe 10% of the perfect trade opportunities. But when you try and go after the other, the 90%, you end up missing that easy 10%. So it's kind of like a balance between the two. I think it does certainly not an issue taking trades on whatever ticker you find them on, but kind of tempering expectations and keeping yourself to a level that you're comfortable with, so you can kind of handle the whole thing.
Yeah, no, that's a great point, Cred. And I think it's also unique and in nature, because I can't handle too many positions at one time either. But I've seen and know people that do pair trading with like 10, 20 positions open at the same time. I don't know how they do it. I wouldn't be able to, but again, it's unique in nature, right? And
Yep.
the one other question I wanted to ask, we're talking about setups, especially, in a trending environment. It could get overwhelming for people. And I've gotten this question as well, is like, how do you filter information? And because everything's trending and people try to chase all these setups at the same time. But so how do you go about filtering information in that environment? Do you use alerts? Like, how do you go about doing that?
Yeah, so two things on that. One is that, yeah, I do use alerts, and I think that is an underrated way to approach the market because, like I said, you can't keep your eyes on 40 charts at once. You got to have some way of organizing this. So what I'll do typically when I'm interested, maybe I'll be looking at 10 different charts, and I'll identify an area of interest on each chart that I want to pay more attention to when we get there, if and when we get there, and I'll just set alerts. I'll have like 20 alerts at any given time set on 10 different charts, and whenever those alerts hit, okay, that means that we've arrived at the area that I care about. And at that point, I'll put it on a different watch list and pay more attention to it. But basically, running through all the charts, setting alerts on a bunch of charts, and then as those alerts fire off, then spending more time looking at the chart and identifying a potential trade opportunity. I think that's vital. So when the markets are going crazy, start setting alerts on everything that you're interested in at the areas you're interested in. And when they hit, pay more attention. I think that's the best way to go about it.
Yeah, 100%. I've been pushing that so much. I think organization and having alerts is key, especially in that environment. Um, and that's been something that's been super helpful for me. Switching gears a little bit, what does risk management look like for you, and how has that evolved for you over time? Have you ever had a situation where you've had to deal with, a significant loss, and how would you suggest people approach risk management and loss in general?
Yeah, it's a process, and I think that there's no easy way to go about it. Like, as much as we tell ourselves that we want to manage risk and we want to risk X% and be very strict on these rules, it's almost like you will not take that seriously until you get a big loss. Like, it takes a big loss to finally kind of drill it into yourself that there's no way around this. Like, you have to pay attention to your risk. And I've made the same mistakes that everyone here has made plenty of times. I think my wake up call personally was back in the day. I don't remember what year it was, but I took a $30,000 loss on like a massive Bitcoin short squeeze. This was back in the day. And for me, that 30,000 was significant, very significant. And it only happened because I had gotten too confident in my position, and I didn't place a stop loss. And I thought there's no way that, we're not going to break down here. And of course, at that time, I didn't have the tools that I have at my disposal, and I didn't have the education, didn't have the knowledge. So I made a play. I took a big loss at the time, a massive loss for myself. And at that point, I was kind of like, okay, you know what? This isn't working. I can't do this again. It's not acceptable. I can't survive this if I go through it a few more times. And so at that point, I started taking it a lot more seriously. And I think it's inevitable. I can tell you as much as, as many times as I say, don't risk more than you can afford to lose. Don't risk X%. But it takes going through it to really understand and take those words seriously, I think. And so, I know people out there are going through the same, in the same position that I was years ago when this happened to me. And we experienced traders in this space we like to call it tuition. Like, you've paid your tuition because it's a learning process. Like, those losses are a learning lesson, and you take those lessons and you build on them, and you make sure that you've learned your lesson and that doesn't happen again. And then you start taking things seriously. And over time, you finally reach a point where it becomes almost second nature. You've gone through the motions, you've gone through the wins, you've gone through the losses. You've realized there's no other way to approach the market besides managing risk, and then you move forward. It's still something that, I mean, don't get me wrong, even experienced traders will struggle with that today. Even us that have done this and have been there and have taken the losses will struggle with it. It's not something that you can just kind of assume you'll never have to worry about again. But if you've been through it enough, you get around to the point where you're making the right moves, you're risking the right amounts, and you get comfortable with navigating that challenge.
Yeah, thank you for sharing that. And you touched on some great points. It's like you said, it's a constant psychological tug of war, right? Like, I've gotten this question too: is like, when do you get to the point where everything starts making sense? I mean, yeah, the puzzle pieces start fitting together, but that doesn't mean that we're not at the whim of getting humbled. You know what I mean? And
Exactly.
it's like you said, it's a constant tug of war. So, that's why you have to pay that tuition to develop a process to try to avoid taking bigger losses. And it's like you said, you have to put your hand in the fire and learn. And there's a book I read a couple of months ago. It's called Mastering the Mental Game of Trading. I think it was a great book because it aggregates like a lot of what's called the outer game, which is like technicals and market knowledge, and then the inner game, which is like mindset and psychology. And there's discussion on psychology. I see, the mindset and psychology a lot, but oftentimes I see it's being blamed for not having, like, you don't have a process in place, but you're blaming psychology. So what is your kind of thought process on, the outer game and inner game in terms of the mindset psychology combined with technicals and market knowledge, and any advice for listeners on how they can go about working on both?
Yeah, so I think it definitely takes both. It takes both of those factors to be successful. Like I said, I think the psychological aspect, that is something that you'll develop over time. As you go through the motions, as you take the losses, as you make the wins. Soon, at some point, psychologically, the wins don't give you as much euphoria, and the losses don't hurt you as much. And that's kind of, I think, at the point where you realize that you've got a good grasp of it psychologically. I think that, like, if you're at the level where you want to be, then a big win doesn't really thrill you because it's just one piece of the puzzle, which is a years long trading journey. And a big loss, I guess it shouldn't be a big loss, but losses and wins should be boring. I think I've heard people say that as well, that, like, if you're trading correctly, then it's boring. And to some extent that's right. Like, I don't get thrilled when I get a win anymore because I know that it's just one part of the equation.
Right.
I'm going to get losses, I'm going to get wins. What matters is, at the end of the
Exactly.
day, that I get more wins than losses. So any
Right.
individual win is not something to celebrate, right? It's nice, but it's part of the process. So I think psychologically you develop that over time, and it gets to a point where you're you're at kind of like a basis at all times. And then for the knowledge aspect, there's no shortcut to that. You can join paid groups if you want. That may help accelerate your learning, but nothing is going to replace time in the markets. And
Yeah.
like something that I've kind of realized as well is there's a difference between reading a guide on how to interpret or analyze a chart versus spending time looking at that chart and then learning how to interpret and analyze it yourself. So, for example, the order flow thing, I know that there's a lot of, I would assume, like manuals out there that talk about how to interpret order flow data, like open interest and funding and these different types of things. And you can read those and kind of think that you have a grasp on order flow. But for me personally, it might have taken me longer to get the hang of it because I didn't go through any of those guides. I kind of just opened up the charts, looked at the data, and then spent hours identifying shifts in data. I think I followed like a couple of traders on Twitter. Skew, I think his username is Skew52, I want to
Oh
say,
yeah,
who
he's a good friend of mine. Yeah, he's
yeah,
really good.
so like his
Yeah.
order flow stuff, something that I would go to his tweets and then I'd look at his tweets and then I'd
Yes.
try and understand them, right?
Yep.
And that
Yep.
was kind of the extent to which I looked at other people for
Yeah.
guidance here. But most of it was like, let me just open up, Velo data, which is what I use for these metrics, and let me
Hmm.
just look at price and let me look at OI and let me look at how they interact and see if
Right.
I can make sense of it, right? And so
Yeah.
something like that might take longer than going through like official guide or something that's out there, but I think that the knowledge that you gain from staring at that chart for hours is irreplaceable. And so for people that are looking to better understand these things, there's no shortcuts. Spend the time, take the time to look at these charts and make sense of what's going on. And that is something that you can't get, anywhere else.
Yeah, 100%. 100%. And I think people look for those shortcuts and patterns and stuff, and it's like, but they're not understanding what's actually happening. They're not digging into the rabbit holes, and going deep into why does this pattern work? Why does this pattern get invalidated? And really digging into it. And the only way to do it is to get dirty. You need to get in the mud. So even I mean, there's not honest to be perfectly honest, there's no great books on order flow and all that stuff. You have to get dirty if you want to learn that stuff. And you mentioned Skew, he's a great friend of mine, and I did the same, and I started picking up on order flow. I would go read his tweets and really deconstruct and break down like what he's saying, and how I can use it for some of the information that I'm looking at. And
Exactly.
like causation, looking at A plus B equals
Yep.
C.
Yep.
C, like just that's how I learned as well.
Yeah.
And so yeah, I'm glad you brought that up because a lot of people struggle with that. And you need to put in the work, right? You just can't be lazy with this.
Yeah.
And I see that a lot. Like, even, I mean, you get a lot of comments. The comments are so lazy. Like,
Yeah.
they're
Very,
so lazy.
very
It's like
lazy.
some of these comments you can Google in a second or two, or if you just read the tweet properly. People are just trying to one up and do all this stuff on social media, which I understand. But if you're really serious about this, you need to put in the work. You can't be lazy.
Yeah, absolutely. And I think, yeah, and I think like again, like Twitter, it could be a little bit, misleading. I don't think people, I guess people realize how much time I spend on this constantly replying to comments, but my day is like 12 hours of charts. Like that's what
Yeah.
I'm doing every single day in and out
Right.
for the last 7 years. Like this
Yep.
stuff did not come easy. If I make
Exactly.
it look easy, it's not easy, right? Like it took a long
No.
time to get here. And I think people don't quite grasp the amount of time and effort that you need or that you need to put into this space to get good at this craft, right? Like it's a skill like anything else. The more time and effort you put into it, the better you'll get, but you really need to put in the time. There's no shortcut to this. And I know some people on Twitter may make it look easy, but it's not easy.
It's
What's
not.
going on
It's
in the
not.
background is hours and hours
Yeah, it's
of
brutal.
of effort, right? So yeah, I think that's important to kind of highlight.
Yeah, absolutely. And yeah, it's like you said, people don't understand. Like, I can read a tweet and see like the nuanced discussion, right? And so I
Yeah.
understand how much time someone has spent on their craft to be able to read some of these things. And the average, I mean, it just looks easy to them because they can't grasp, how much time is required to get to that point. But it's like you said, I mean, yeah, I've spent a lot of time looking at charts, looking at information, looking at data. I still do. And that journey of learning never ends. And yeah, that's what I wanted to get through that message to whoever's listening is, you need to put time into the craft. And it's like anything else, to become good at anything requires dedication, and you just can't be lazy about it. Um, and I talk about this on Twitter a lot too. Like some of these comments, I guess they're so lazy. I'm just like, man, if you're serious about this, please like put in more time, make a little bit more effort.
Yeah.
But yeah, I just wanted to touch on that through this discussion with you. And along the same lines, there's a book. I don't know if you've heard about this book. It's a phenomenal book. There's only a few books I really recommend when it comes to trading, but this one's called Best Loser Wins by Tom Hugard.
I
And
have not heard of it.
okay, so it basically discusses how important it is to be able to accept losses and not have your ego tied to the market, and how to learn from losses. And along the same lines, I wanted to ask you two questions. One is, what qualities do you think are key for a trader to be successful? And on the other hand, I mean, you've been doing this for a while now, and you get a lot of questions. You've probably seen people come and go. What do you think is the common point of failure when it comes to people not being able to be consistently profitable as traders?
Yeah, so I think probably the biggest characteristic to being successful as a trader is you need to be open-minded, I think. I think that the market will humble you if you feel as if you have it all figured out. You need to constantly be evaluating possibilities, potential price action, potential price movement, and you need to be fluid in adjusting as things develop. And I think that's where a lot of people struggle is they have a preconceived notion or idea of what the market should be doing or where it should be headed. And when things are not looking like that's going to pan out, there's this hesitation or there's this hesitation to kind of shift ideas or biases. And as a trader, that's vital, right? Now, obviously, there's a difference between someone's idea if it's based on a high time frame or a low time frame, and if there's changes in the low time frame, it doesn't necessitate a change in your idea on the high time frame. So that's a key distinction. But you have to be willing to be open minded and consider all possibilities and all potentials of the market to be successful. Obviously, patience is a big one. Like that goes without saying. I think people that are naturally very impulsive would naturally struggle at this because impulsivity is the last thing you really want in a trader. You want to be balanced, cautious, patient, taking opportunities when they come, avoiding opportunities that may not be ideal. So all these things are kind of things that I think make an ideal trader.
Yeah, 100% agree. And like my two cents is, one thing I also think is that's important is grit, right? I mean, I feel like we have like a
Yeah.
delusional amount of grit. Like we
Yeah.
definitely have some nuts and bolts loose in our head, because I mean, this is, we've spoken about this, but this is one of the most difficult things that you can possibly do.
Yeah.
The rate of success is, in front of, like, the numbers are in front of everyone. There's very
Mhm.
few people who can be consistently profitable. So, grit and hard work, I think, is definitely something that I feel is important as well. And on the other hand, what do you think? What do you think people like fail to be able to do, or some characteristics that lead to failure when it comes to trying to be consistently profitable as a trader?
I think it all kind of goes, it comes back to like how much time are you and effort are you willing to put into this? Because, like I said, I think I've experimented with every single method of technical analysis that's out there. So you can
Right.
imagine how much time I've spent on things that
Right.
didn't work, right? Like I found stuff that works, but I spent a lot of times on stuff that did not work. And
Mhm.
so you can't view that as like a waste of time or wow, I wasted all this time and effort, studying something that didn't pan out. That can't be the approach that you take because you're not going to make it to getting to the point where you're successful, right? You have to be okay with failure. You have to be okay with spending time on something that's not going to help you at the end of the day, because at the end of the day, going through those motions is what gets you to the end where you find something that does work. So I think you kind of nailed it on the head. Grit, like you have to have grit. Like I said, 7 years of doing this, and you're going to go through ups and downs, and it's going to be tough. And finding a balance, a work-life balance, is one of the toughest things that I've struggled with. I still struggle with. It's still not where I want it to be in terms of work and life balance. So that is a constant challenge. And if you don't have the patience and you don't have the mental, uh, capacity to work through your struggles here in the space, you're not going to make it to the point that you want to be at. And I think that's probably it. Is most people that fail just don't spend enough time on it. They don't keep trying after they fall down, and eventually they give up, and that's the end of that journey. So I think that's probably the biggest factor here.
Yeah, agreed, agreed. And yeah, it's like you said. I mean, if and you also need to be able to like preserve capital, right? Because I mean, if you just throw, if you're trading in a manner which basically cleans you out, you don't even have any chips to play with anymore,
Yeah.
right?
Mhm.
And so like I've seen that a lot as well, where basically people just like lose all their money, and then it's like, all right, well now you can't be even be a participant at this point.
Yeah, absolutely. Yep.
Yeah, so we kind of went through that entire psychology and talking about mindset and skills to be successful. Now I wanted to shift gears and talk a little bit about your short-term views as it pertains to the market currently. We're pre-recording this, so this is the 10th of May, and we just had this move to the point of control, and we sold off again to the bottom of the range, to the bottom of the value area, I would say, not the range. But how do you see, the next few weeks, and what do you see currently in terms of Bitcoin in the market in general? And then we'll get into, we briefly touched on your long-term kind of thesis, so we'll dive into that as well.
Sure. So high time frame, like macro, very, very bullish here. We're pretty much at prior all-time highs, and I think we're headed a lot higher over the next 3 to 6 months. No doubt in my mind we'll hit 100K plus before this is over, and I think it ends within by this year. So I think within the next 3 to 6 months we'll see 100K plus. That's kind of the big picture. Going down to a little bit of the lower time frames, I think we're trading right now at around $60,000. I think downside is probably limited to somewhere in the 50Ks, which means yeah we could dip back into the 50K region, sub 60K down to 55, 57, 53, whatever. That's totally going to be dependent on momentum and potential for liquidations and liquidation flushes, in my opinion. So that's possible. But what comes after that, in my opinion, is another pretty aggressive leg to the upside. We've seen a pretty vertical leg from 38K up to 75K. That's about a $40,000 move to the upside that we just experienced for the last couple of months with almost no major pullbacks. This
Right.
pullback that we're in now is the first major pullback since that
Yep.
$40,000 rally. And
Mhm.
essentially, what I believe is that once this pullback ends, which we're in a consolidation phase. So again, dips into 50K is fine, but once that consolidation ends, the next move up, I think, is going to be another $30,000 to $40,000 move to the upside. So when I say 100K plus, you can see how quickly we could get there, considering that our last major leg up was 40K and we're trading at around 60. Even if we dip down to 50, 30 to 40K up from there is back to 80 to 90K. So 100K is really not that far away, kind of the bare minimum, in my opinion, for where we're headed. And we just need to get through this correction. You just need to stay alive through this correction.
Yeah.
And I've said previously on Twitter, you're going to be able to see, up only price action, the likes of which we haven't seen in a few years now. Once we get through this, so I think good things are on the horizon. You just have to make it through this current consolidation.
Yeah, I appreciate you sharing that. And along the same lines, what do you think about this conversation about, in terms of the next level? There's this entire conversation around, hey, the narrative's basically been done. The Bitcoin ETF narrative's done. What's the next narrative that's going to carry us higher? This entire discussion around, retail flow, and they might not be coming back because they've already been burned the last time. What are your general thoughts on that when you read any? I don't know if you've encountered that or if you've spoken about it, but I wanted to get your thoughts on that.
Yeah, so I think honestly, I think this focus on the narrative is just a big distraction. I think people need to kind of take a step back and stop focusing on the narratives. Like it just serves to distract you from the big picture. And I mean, I've said this previously. Like back when I said that I expected new all-time highs before the halving, there was no narrative that made me say that. Right? It was based on cyclical price action and all these things, and it happened. And even moving forward, I didn't know that the ETFs would be approved when they were approved. I didn't have any of that narrative stuff going on, but I expected this type of a very aggressive rise to the upside that would catch most off guard, which I think it pretty much has. The reality of the situation is you can look at the on-chain data that, up until we broke prior all-time highs, this was the case. Supply of Bitcoin was constricted in a way that we haven't seen it in a number of years, meaning I would say, I think it was about 80% of all the Bitcoin in existence had been kind of moved to these dormant wallets that don't typically sell their Bitcoin until new highs are met. So that massive supply constriction is there, whether or not there's some ETF approval, whether or not there's retail, whether or not there's any of these narratives going on. The reality is that most of the free float of Bitcoin had found its way into hands that were not selling, that typically don't sell until new highs are met. So supply was constricted regardless of any of these narratives. And this type of a move up as a result of, a supply shortage and a supply and demand equation was inevitable, in my opinion, regardless of any narrative that could have found its way into the conversation. So that supply restriction existed until we hit prior all-time high. And historically, what happens is when we hit prior all-time highs, those entities that have been accumulating Bitcoin essentially through the bear market will then start selling that Bitcoin into the new fresh demand that appears as we break all-time highs. And that has started to happen. So we peaked, I think that number peaked at around 80%, somewhere around there. I think it's down to like 60% or something now as those accumulators start to offload their positions. But what they do, they're very smart. What they do is they sell those Bitcoin that they have when there's an increase in demand. And if demand tapers off, they stop selling. So it's kind of like
Right.
they're kind of like these master, not necessarily manipulators, but they're kind of controlling the ebb and flow of the market when it comes to supply and demand. And
Right.
so what that means is we get to a point where the demand kind of cools off like it has here at 60K, in the very short term, and they taper their selling. So now they've reduced the flow of Bitcoin to the market to kind of adjust for this kind of steadying of demand. And as demand increases, based on whatever causes it to increase, then they'll increase their selling as well. So they're tapering their sales to the ebb and flow of the markets to make sure that this uptrend is steady and consistent and healthy. At the end of the day, that supply constriction is being kind of it's kind of like I don't know if you're familiar with the supply of diamonds, and you might have heard about how this diamond
Yeah.
supply is kind of controlled by a few key players, and
Right.
they make it so that diamonds are scarce when in reality they're kind of hoarding the supply and letting it out slowly. Same with Rolex watches. I think you may have heard about that whole thing going on. But basically it's the same game that's played in every industry, and it's happening here. And so the narrative is just a way to distract from the fact that supply is constricted, and it'll remain constricted until more demand comes in, and it'll adjust accordingly, and price will continue moving up so that these players can sell for a profit at the highs, as we're pushing new highs, and distribute into new retail that's flooding in on the basis of some narrative that they've heard, that makes them buy at these exorbitant prices, that makes them buy at the highs because of some narrative. So it's all, the narratives are just overblown, and I think most people probably shouldn't pay too much attention to them.
Yeah, I know you brought up some great points. It's like meter supply, right? I mean, it's a certain kind of supply. It's not supply that's just continuously dumping. It's looking for demand to dump
Exactly.
into, and it's strategic about their selling.
Yeah.
And there's coin glass, and there's all this stuff really starts coming out once things start retracing. It's always this way. Like the
Yeah.
general sentiment on Twitter, it's always the same. It's always the same. This happened, multiple times whenever we got a retracement, even before. I think we consolidated. It was in February before we put in this move. And even during that time, we had the same thing. Before that, we had the same thing. So this is very sick. Even the aggregate behavior is very cyclical in nature, in terms of how everyone reacts and the type of stuff they start talking about.
Yeah,
Um,
definitely.
and the other thing I wanted to talk to you about was, um, the general direction that you feel like crypto is headed in as a whole. Do you think about that in terms of, like, TradFi and the ETF, and there's also this discussion about, hey, this is the last cycle to make it big because the volatility is going to get muted. What's your thought on that?
Yeah, so I do think that, and I said this years ago, I think like in 2019, every market, no matter what it is, undergoes different cycles, and different cycles of different degrees. And my personal perspective is that we are kind of at a stage where the internet was with the dot-com boom, and we have yet to see the crypto bust or the dot-com bust of crypto. And that doesn't mean that crypto is going to zero and it's dead. It's just like the internet, where we saw a bust where a lot of the BS was washed out of this internet space, and what rose from that bust was a multi-decade bull run, where you got the eBays, the Amazons, the Apples of tech and internet that kind of established themselves. So I think we're kind of pre-bust, right before the big bust on crypto, and I think what's going to bring that in is regulations are going to hit, and a lot of the wild west of crypto that we see today is going to get washed out. And what you're going to be left with is the key players, the key projects that are going to rise from the ashes and be the big names that we're going to see in crypto for what I think will follow, which is again, a multi-decade bull run. So I think it's kind of like, I think a big bust is coming this next crash. I think after we break 100K and see all-time highs, it's going to be followed by the biggest bear market that we've seen yet. But I think that what comes from that in the following decades is sort of a tech stock like rally in crypto, with whatever's left, of course. And that'll issue in kind of the golden age of crypto, like we've seen with tech stocks over the last 2 decades. I think that's kind of where we're headed with crypto.
Oh, I didn't realize I was on mute.
No worries.
So yeah, thanks for sharing that. And then, along the same lines, in terms of like the tech and the narratives, what sectors are you keeping your eye on when it comes to crypto? Like, are there any sectors? There's RWA, there's AI, and what are your general thoughts on that? Are there any sectors in particular that you're interested in? And obviously there's this new rise of perp dexes, and do you have any thoughts on that? What might be holding them back? And if you have any thoughts on perp dexes or any other sector in general that you keep keeping your eyes on.
Yeah, sure. So I think in sectors in general, like there's no specific sector that I'm necessarily focusing on. I think for me, it's like whatever sector everyone's talking about right now, that's the one that I'm not interested in, because odds are the coins in that sector have probably pumped, significantly off their lows, which is why everyone's talking about them. And my kind of strategy on the macro is always to get into assets when people are not paying attention to them, and to start selling when people start talking about them constantly. So in terms of sectors that I'm interested in every sector, because I think money is going to rotate through them all. But for example, gaming right now is one sector in crypto that's kind of dead in the dumps. You can look at all the big gaming tokens from a year and a half ago or 2 years ago that had their massive rallies, and most of them are down 90+% from the highs. That's where I get interested. Where an asset has seen its massive run, it's down now 90%. And obviously, I think that we're headed to 100K plus on Bitcoin in the coming months, and I think alts are going to follow after that. And so I think most of those assets that have seen massive drawdowns are going to have their time in the spotlight again once alts start pumping. And so those are the sectors that I'm most interested in, not really the ones that everyone's talking about now, because I think that the time to get in was before everyone's talking about it. But yeah, no like particular sector. I think they're all going to have their chance to shine. It's just a matter of when those chances are going to come along. In terms of perp dexes, I think that's, I mean, myself, I actively trade on centralized exchanges, and I'm actively looking for a perp dex that can handle my type of volume. And I think that's the biggest challenge that perp dexes today are facing, is liquidity issues. Now,
Right.
it's hard for me to know the perspective of an, like a smaller retail trader, but for me, that's my biggest issue, is finding a perp dex that can handle my level of liquidity or my level of volume. And I think the perp dex that can nail that down, the first one that can really nail that down and get sort of like centralized exchange like liquidity, is one that will find
Right.
great success. I think that's where most are struggling right now, and I think the one perp dex that can nail that down will see a lot of success.
Yep, agreed, 100%. And you alluded to this earlier in terms of sectors and narratives and all that stuff. There's the quote by Ben Graham: "In the short run, the market is like a voting machine, but in the long run, it's a weighing machine." And so, in the long run, the stuff that doesn't matter usually gets cleaned out.
Yeah.
And in the short run, we have all these. It's like basically a beauty contest,
Yep.
right? Like John Maynard Keynes said, basically comparing it to like a beauty contest.
Yeah.
And so yeah, the short run, you get all these narratives and people find certain things attractive, and that's what's going to pump. And then eventually, in the longer run, things that actually provide value will stick around. All right, so we covered all of that stuff. And did you want to get into like the theory that you've developed regarding the cycle as a whole, briefly, or is that going to take too much time? We can just reference your tweet and just send people that information, and they can go read that if that's going to take too long.
Yeah, it's something I've covered in a lot of videos and tweets and stuff already, so I don't want to spend too much time on it. But basically, long story short, if I could, yeah, long story short is that I believe that we're still in the same kind of cycle that we've been in since 2018. And I know a lot of people think that our cycle ended in 2021 at 69K, and so based on that, they're expecting this cycle to continue well into 2025, 2026. And so my thesis, in a couple of sentences, is that I don't believe this is the start of a new cycle. Rather, I think this is the tail end of the cycle that started in 2018. And I think that we're going to get a blow off top this year to conclude that cycle. And that will then be followed by the bigger bear market that follows every major cycle. And so the bear market that we saw from 69K down to 15K was a bear market. But I don't think it's of the degree that most think it was. I think it was of a smaller degree, as crazy as that sounds to say. I think the next bear market will be larger in terms of degree, meaning either deeper in price percentage
Mhm.
wise or for a longer length of time to return to prior all-time highs. I think one of those two things are going to be met. So if you thought the last bear market from 69K to 15K was brutal, I think that what's coming is going to be worse, either in terms of price or in terms of time, one or the other. I think it's going to be worse. And so that's kind of my perspective, that most people are going to get caught off sides because they believe that we've just started a new cycle, and
Mhm.
based on that belief, they think that this cycle should last for another 3 to 4 years. But in
Right.
reality, I think that we're working on the tail end of the last cycle, and I think that's going to catch a lot of people off guard.
That's very interesting. And to expand on it a little bit more, do you look at SPY or equities? And the other thing is, now that people are talking about elections and who's going to win and what kind of impact that's going to have, do you pay any mind to that at all, or consider that in kind of your theory that you've developed regarding the cycle?
I look at traditional markets, I look at the SPX, and I chart it as well. And I've shared a few charts over the last few months regarding the SPX, but I don't look at it so much in terms of like how is this going to affect crypto. I kind of look at it on its own, and I have my own thoughts and opinions about traditional markets and where they're headed, especially when it comes to traditional equities and tech stocks. But I think that I think that there isn't enough price history in crypto to kind of draw valid conclusions on the correlations with traditional
Mhm.
markets, because I hear a lot of people that say, well, crypto follows traditional markets, crypto follows the SPX or the DJI, and it's like what you have to realize is that crypto is only 10 to 15 years old. And in the time that crypto has existed, we've been in a secular bull market on traditional equities. Like since 2008, we've been up only on traditional equities. And so since crypto started, we've been up only. But correlation does not necessarily equal causation. We've only ever seen crypto in a secular bull market for traditional equities. So the fact that they're correlated may not necessarily speak so much to, traditional equities causing crypto to be bullish. It may simply be that both of them are in a bull market at the same time. And that's just because crypto's only existed for as long as, traditional equities have been in a bull market. So I think it's too early to draw conclusions from that. Like I want to see crypto in a equity bear market. We haven't had a chance to see that yet in a massive, secular bear market for equity. So I don't try and draw conclusions between the two yet, because there just isn't enough price history, in my opinion, to draw those conclusions. But I do look at traditional equities. I do look at tech stocks as a sector, and I do have my opinions on those, which I've made clear on Twitter as well. But yeah, kind of independently as to crypto, not necessarily looking at them for guidance on one or the other.
Right. Okay. Yeah. Thanks for answering that. I've always, everyone has kind of their own view, so I'm interested in, hearing what people's thoughts are in terms of the correlation and how they view that correlation in general. So just to shift things a little bit, typically I ask people on Twitter for questions. I usually don't ever get great questions, and this time I actually forgot. So, um, the other thing that I typically do is do like a rapid fire round where I just like say some words or tickers, or not tickers necessarily, chains, or certain words. And if there's any thought that comes to your mind when you hear it, it's kind of like a rapid fire round thing. Would you be down to do something like that?
Yeah, let's do it.
All right, awesome. Okay, so the first one is Solana.
Solana, fantastic run. Just be cautious. Anything that has run that much, you never know when it's going to come down. If you're seasoned with technical analysis, then you know what to possibly look for. If you're not, have no idea about technical analysis, just be cautious. You don't want to get caught in a pump that takes some months to recover from. That's about all I have to say there.
Awesome. ETH.
ETH, I think people are underestimating it. A lot of calls for its downfall. A lot of people saying that it's lost its shine. I think ETH will have its moment. I think ETH will have its time. It's not quite yet, and we may see a little bit of more blood against Bitcoin in the coming months, but it'll have its time again.
Crypto Twitter.
Crypto Twitter, you can learn a lot if you pay attention and you put time and effort into following the right people. A lot of toxicity in crypto Twitter, but also a good place to connect with like-minded individuals, people that may not have the same thoughts as you, and you can learn from them. And a good place to connect with people you normally wouldn't have the opportunity to connect with. So take advantage of the connections. Try not to burn bridges. It's not going to help you. And yeah, absorb and learn as much as you can from it.
All right, this one's a little controversial because I know you've been getting shit on this for Twitter, shit about this on Twitter. Meme coins.
Ah, great one. Okay, so hopefully I can make it very clear here. I'm not calling for the end of meme coins. I think that meme coins are going to have a monster run at the end of this cycle. Once Bitcoin tops and money flows from alts, meme coins are the highest beta to Bitcoin. So when money does flow out of Bitcoin into altcoins at its peak, I think meme coins are going to be a big beneficiary of that. They're typically last in the cycle, as we know, for those who have been here for multiple cycles. And I think that's going to happen again. So I think the biggest rally for meme coins is coming. That being said, in the immediate short to midterm, they do need to cool off. I do think that we've seen a local top on most meme coin majors. I think a couple might make more highs. As I've previously said, Pepe might make another local high here. It looks good to do that. But I think most are in distribution. I think that this distribution will last for a few months. We'll get some drawdown across the board. I think it'll be a big opportunity if we get it, though.
Awesome. BlackRock.
BlackRock, let's see. Obviously, a big player in the space, in the traditional finance space. I think they'll be a big player in crypto. I think it's been clear now that they're interested and probably going to get more and more involved as the months go on.
Awesome. And then the last one, leverage.
Leverage, stay away from it if you don't know what you're doing. If you have to ask someone whether or not you should use it, you should probably not use it.
Awesome. Thanks for going through that. Those were some phenomenal answers. And now we're coming up on the tail end of this conversation. And typically, I just like to ask, people what their general routine is, what a typical day looks like for you currently. How do you manage your time? How do you reset when it comes to, managing stress? Because this is, trading is not for the light of heart. It's an extremely stressful environment. And so, I typically like to ask people what their typical day looks like, how you manage your time, and what do you do to reset or manage your stress?
So great question. Something that I struggle with as well, managing my time and stress and all those things. I have this sort of personality where, like, if I find something that I focus on, I kind of laser focus on it and I kind of do my best that I possibly can, possibly at the detriment of some other things, which is not ideal. That's probably not the approach that most people want to have, but I kind of laser focus on one thing in my life and do it to the best of my ability and kind of tune out other things and then shift focus to the next thing after that. So for me personally, I do think that we are in a very small window over the next 6 to 12 months that I think will not come again for years. And so my strategy right now, or my schedule right now, is not ideal. It's not what I would like it to be, but it's what I think I need to do right now for this window of opportunity that we have. And so it's a lot of waking up, hitting the charts, spending hours doing that, eating in between, um, and not taking a break until the end of the day when I can. It's a lot of hard work. It's a lot of effort, and it's not ideal, but it's, for me and my approach, what I think is necessary. The way that I see it, every hour that I spend working right now in this space is something that would normally take me 10 hours to achieve on a normal, in a normal environment. So I think this window of opportunity is something that I'm fully taking advantage of, possibly to the detriment of some other things, but I think that in the long term it'll benefit me, and so that's kind of my approach here. I do think that you need to have some outlets to stress, whether that be watching TV, playing video games, going out, getting some sunshine, hanging out with friends, spending time with family, going on a hike, whatever it may be. It doesn't really matter as long as it helps you alleviate some of that stress. I've found recently that going out for a walk in some beautiful sunshine does a lot to elevate my mood personally and help me relieve a lot of stress. So just stepping out for 20 minutes a day and just getting a walk in the sunlight for me has helped a lot. If I'm constricted or restricted to my computer for most of the day, that's what I find helps. Other than that, just getting physically active, I think, is a big one. I think it does a lot to help with managing levels of stress. Even if you're not like a workout buff or anything, just literally just go for a walk. I think that helps a ton. More than anything, that's probably the biggest thing that helps me. And then, yeah, just taking some time away from the charts when you can. If you are actively trading, setting alerts. And then what I do a lot of times is I'll set alerts on my computer. I'll leave my computer, I'll turn the volume up. I'll leave my computer, I'll go relax for a little bit. Yeah, and then if the alarms ring, I'll come right back and I'll sit on my computer. But a lot of times in between the trades, you really don't need to be sitting on the computer if you've done your analysis for the day and you've kind of got a good roadmap for the day. Just set some alarms, walk away, and then come back when they ring.
Yeah, I appreciate you sharing that, Cred. And I don't want to get too philosophical here, but along the same lines, I've studied basically people, successful individuals across different fields, like athletes, fighters, traders, people in the financial world. And I think this flaw, you could call it a flaw. It is unhealthy, but there's always a period of time where they're absolutely obsessed with their craft to to a degree where they basically everything else gets tuned out. And so other things suffer, of course. But I always view everything as a trade-off, right? And it's a matter of, hey, what trade-off are you willing to make to get to where you want to get to? And it's a matter of your priorities and what you're looking to do. But yeah, this theme I've seen pretty predominantly across different fields, and I share the same flaw. Like there's periods of times where I basically complete forget to like there's days where I forget to eat, unless I have an alarm, So these are things that you have to prioritize and manage. And for anyone listening in, I think you gave some great advice, like some things that are really important. First of all, like sleep. I think without sleep, like everything else starts falling apart. So even if you work out or you do all these other things, but your sleep is suffering, it basically is counterproductive. So trying to get into sleep, I know like it's a struggle, especially when the environment is trending and there's certain situations. So that period of time, you obviously make that intention of, hey, this is I'm doing it for this period of time. But yeah, sleep and like you said, movement is so important. Getting sunlight, getting fresh air, having some kind of a social connection outside of there's a lot of people that are Discord and Twitter and talking on calls. That's cool and all, but I think as human beings we're social creatures, so it's so important to have that social interaction in person. But thank you for sharing that, and I hope people listening in can benefit from this conversation we're having. Just to wrap it up, what advice would you give to anyone that's listening in who wants some blunt wisdom for this cycle, or someone who just starts? I mean, if you're just starting to trade, that's a different story. But what kind of wisdom would you give for anyone for this particular cycle? What should they be doing right now, and what should they be preparing for?
Yeah, so I think I've heard from a lot of people with varying degrees of success in the market so far in this cycle, and I think a few key things I'd like to say. First off, if you're not an experienced trader, don't try to trade this market. You have an opportunity right now to make significant amounts of money by buying spot and holding it for the next 6 months. If you're trading, either you're an experienced trader who's doing this like I do, every day as part of their job essentially, or you're trading to learn. And if you're trading to learn, then you shouldn't be risking that much money, because if you haven't learned how to successfully trade yet, then it's all just practice and you should be risking a very, very little amount. I always recommend separating spot and trading portfolios. So I have a lot of spot holdings that I will not touch for the next 6 to 12 months, regardless of whether I think the price of this asset is heading up or down. And if I want to trade those assets, or if I think they're going to go down, I'll just trade them in my trading portfolio. This way, if I completely screw up the trading aspect, I can still make money over the next 6 to 12 months on the spot aspect. And I think that's something that people overlook and that they should do. Second, don't mess with leverage and those things unless you're actually an experienced trader. You know how to use leverage. If you have to ask someone how to use leverage, or what's the right amount of leverage to use, then you shouldn't be using it because you don't understand how to use it correctly. If you're using leverage correctly, then the amount that you're risking is the same whether or not you're using leverage. If you understand what I just said right there, then you get leverage. If you don't understand what I just said, if that's not making sense to you, then you need to spend some time understanding it better before you use it. Finally, I do see some people that have not managed the risk, have not risked more than they can afford to lose, and have lost quite a bit. And a lot of them feel like giving up at this point in time. And to them, I'd say that the biggest opportunity in the market is yet to come over the next 6 months. This is not the end of it. This is the beginning of it. And so even if you're down right now, if you just buy some spot on some coins that you feel confident in, that are not up multiples off their lows, that are kind of chilling in an accumulation range or at the lows, that have some sort of fundamental backing behind them, um, and that are not outright scams or rugs, right? Like, I'm not saying this for meme coins because they don't have much fundamental backing them. But if you can identify some solid coins that have not had massive runs yet, and you simply buy spot and hold, there's a good chance you can make a lot of money over the next 6 to 12 months. I'm talking 5x, 10x. I think that's very much doable with spot only over the next 6 to 12 months. So don't count yourself out here. Just all you need to do is survive, buy some good picks, hold on to spot, and you still have a chance of recovering and possibly making back everything you've lost, if not more, just by being patient here. So I think that's a big one. We still have a lot of opportunity over the next 6 to 12 months. Take advantage of it. If you want to learn how to trade, learn how to trade. That's fine. Either use paper money or use very, very small amounts of money, and don't risk more than you can afford to lose, obviously. And once you've mastered trading with a small amount, you can probably do it with a little bit more. But there's no reason to jump into trading with massive amounts when you're not sure how to do it. So
Yeah, that's some phenomenal actionable advice. And what I wanted to ask you as well is, are there any Twitter account recommendations or any accounts that you'd nominate for an episode of Perpetual Perspectives? You can also, I don't want to put you on the spot. So if there's, if you can give me these names later, or, however you want to do it. But if you want to mention some right now, that's perfectly fine too.
yeah, I think well, I've already mentioned Skew. You mentioned he's your buddy, so I'm sure he's either been on here or he will be on
Oh
here
yeah,
at some
absolutely.
point.
Yeah. Yeah, we
Yeah.
spoke for like 3 hours. He
Oh,
came
there you
on.
go. Yeah.
We spoke for like 3 hours on it. So if anyone's listening in, if you're interested, go ahead and check that episode out as well.
Yeah. So other than him, there is actually CJ. His name is CJ900X. Guy that I chat with almost daily about the markets.
Interesting.
I don't think there's anyone that I talk to as much as him about the markets, and he is primarily a price action trader. So he uses some of the same tools that I do. He doesn't have as much of a focus on LE wave as I do, but his perspective, if you want perspectives from someone that I can vouch for, the guy's a great guy. I consider him a close friend, and very, very honest, straightforward guy with, I think, some invaluable insight into the markets. And if he's willing, of course, to hop on a show, I think
Of
that
course.
he
Well,
would be
I'm
great
gonna try
to.
to push him through you, of course,
Yeah, yeah,
to get to him. But we'll try to bring him on. I follow him. I believe he follows me as well. I've seen his stuff on Twitter as well. So
yeah.
awesome. Anyone else?
Off the top of my head, no, but I'll probably shoot you a DM with some more
Yeah, for
names
sure. Yeah, let me know
as
if
they
there's
pop up.
any, account recommendations for people that are listening that they should follow, or any accounts that you'd I can reach out to, and it'd be nice to have a conversation with on here.
Definitely.
Aside from that, is there anything else that you'd like to plug?
No, just my Twitter and my YouTube, both at CredibleCrypto. Not much else. Pretty much all my content is shared there. So, yeah, actually, I do want to say something. I don't have any any paid services, or if anyone's commenting on my posts asking you to send them money is a scam. I say it on tweets enough, but I know not everyone sees those tweets, and it happens more times than it's unfortunate. It happens a lot. So just, I'm not going to ask you for money, guys. If someone's commenting about a private group or a Telegram or whatever that I have, it's not me. Just stay away from that. Other than that, all my content you can be found on Twitter and YouTube. It's all free to access.
Yeah, I've seen a lot of like fake accounts, especially like for your account. There's like so many fake accounts going around, like DMing people and stuff, which makes sense. I mean, you have a pretty fairly large account, so yeah.
Yeah.
For anyone listening in, be careful. I mean, this is like a typical thing where people go around asking for money through fake accounts, especially using the reputation of larger accounts. So be careful when it comes to that. But aside from that, man, I really appreciate you taking the time to have this conversation with me, Cred. I mean, I usually bring on people that I'm genuinely interested in having a conversation with, being selfish, and then, anyone listening in is obviously going to benefit from that conversation as well. So to anyone listening in, I hope you enjoyed this conversation and were able to take away some actionable items or things that you can consider to improve upon. Until next time, we're out.
Thanks. Appreciate you having me.